if you buy into what I said earlier, which is that we're now in the call it institutional adoption phase, well, I can promise you nobody at Klarna or nobody at JP Morgan cares about the Bitcoin halving cycle when they think about running their businesses on blockchain rails. And nobody at BlackRock cares about the halving cycle when they think about increasing the demand for their tokenized assets, right? What they care about is, how do I build a net new business on crypto rails that is cycle independent and that will, serve a broad set of people and serve them better and serve them with less intermediaries and maybe be lower costs. And if those are the people that are now controlling or are now the marginal buyer, then the flows of crypto and of Bitcoin are now going to follow the whims of those people. And the whims of those people are going to follow the business cycle, not the halving cycle.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features Dragonfly General Partner Rob Hadick. Rob, welcome to the Edge Podcast. How are you doing?
Doing great. Appreciate you guys having me on today.
We really wanted to bring you on to give us a glimmer of hope going into the new year. The sentiment in the space has been quite negative recently. Why don't we start, though, with more about your background? Tell us more about the work you do at Dragonfly.
Yeah, so I'm excited to be able to give a bit of a glimmer of hope because I feel like we need that right now. And I feel like, there's so many good things happening and so many things to look forward to. So looking forward to the conversation. But yeah, on my background, so I'm a general partner at Dragonfly with my three other partners there. Been here for a little over 3 years now. So I joined at the beginning of our third fund. We're now on to our fourth fund. We have really been focused on what I would say all things crypto, but from a lens of, hey, this is a global borderless financial system, right? And so what do we back? We try to back everything that empowers that, everything that maybe applications that are specific to that. And we've really been focused on that since 2018. Before I came to Dragonfly, I ran a crypto business at a fund called Golden Tree Asset Management. This is a big traditional fund, has about $50 billion of AUM. We had a small pocket of about $150 million of partner capital that we were investing in 22 and 21 and before that. Prior to that, I worked at a merchant bank, and I had also started my career at Goldman, primarily focused on the fintech space. I also happened to be at Goldman on the first crypto working group that existed there, prior to them having a full-time digital assets business. This was, over a decade ago. Now at this point, I feel like I'm aging myself. But, it feels like a lot of those topics we were talking about then, like tokenization and, kind of global money movement, are just now coming to fruition. So a little bit of Groundhog Day, but exciting to see everything kind of really start working. So
before we go any further, let's hear a quick word from our sponsors who make the Edge Podcast possible. Sponsors like REDSTONE and TOROS Finance. Accountable is the new standard for real-time financial verification. In crypto, financial health still runs on screenshots, lagging audits, and blind trust. But Accountable changes that. Powered by the Data Verification Network, it proves assets and liabilities privately across wallets, exchanges, custodians, and banks. Accountable already secures over $2 billion in verified assets across 115 chains and over 90 data sources. To learn more, go to accountable.capital. Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, From value accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, Redstone delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose Redstone oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need Redstone's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to Redstone for supporting us here at the Edge Podcast and Edge Newsletter. NEUTRL is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. NEUTRL is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi.
Rob, I have a few questions just kind of on the macro landscape of maybe where crypto's at right now as we head into 2026 and beyond. But I heard you say on a recent podcast, I think it was Empire, you said the ideological phase of crypto is over and we're in the institutional phase or mass adoption phase. What do you mean by that? Can you just break that down for listeners a little bit?
Yeah, and I did say that on Empire and maybe a week or two ago. And I think my perspective, and maybe we'll talk about this a little bit, but we have seen a bunch of these posts over the last few weeks, and we see this kind of every cycle where people are saying, hey, listen, I regret my time in crypto, or crypto's only building casinos, like we're not doing anything that is, furthering maybe the libertarian ethos, which, people got into the space for originally, or maybe, just creating common good, which a lot of people, obviously, we all want to be a part of something that's creating common good. And I looked at that and I said, well, listen, you can be ideological about the reason you entered the space, whether it's political, whether it's, because of you really believed and you wanted to go back to a different monetary system, you really wanted to be able to have self-sovereignty again. And, I understand that that's a big part of the reason that a lot of people came into the space. And for many years, that was what dominated the conversation. It dominated a lot of the innovation in the building that was happening. It dominated some of the venture capital that went into the space. But we've kind of moved on from that now. And I think this is part of what's, kind of tearing out a few people, which is that, the conversation today is about tempo, right? And Stripe. It's about Robinhood. It's about what is happening in terms of stablecoin movements. And by the way, stablecoins have been a really interesting use case for bringing, dollar access to people who otherwise didn't have it, for creating better microfinance for those in need, right, in the global south. But stablecoins are actually the biggest part of the stablecoin industry that's growing today is actually B2B use cases, right? It's not actually anymore like P2P use cases or global south dollar access use cases. So what's become clear is that we're now at the time where, my focus, I'm going to focus a lot of the venture capitalists, a lot of, just call it the headlines and what people are talking about and what people are building towards has been about how do we bring mass adoption? How do we bring the corporates on chain? How do we bring a broad set of users on chain? And that is now the defining part about crypto, right? We have, Caroline Pham from the CFTC is on CNBC every morning talking about how we can now use, crypto and Bitcoin as a collateral asset for, trading, right? These are the types of things that are getting the vast majority of people, I think, really excited. And if you're going to continue building in this space, it's not that you can't continue to be ideological, but that is now where most of the money and interest is probably going to be flowing, right? And so that is the phase that I think is defining where we are today and will define where we are next year and in the years coming.
So as the institutions adopt crypto, or as we shift into this institutional adoption phase, I, as an investor, am thinking, how do I benefit from this? How do I position to benefit from the upside of all of this growth in the space? Any ideas for 2026 for, investors that are on chain and are totally buying into everything you're sharing? They're seeing, we just did an interview with Robinhood. They're building products on chain. They've got their own Ethereum L2. We, of course, have Coinbase's Base. We've got Kraken's Inc. These are like clear examples. BlackRock is on chain. What can we do to ensure that if the institutions are not just coming, they're already here, how can we position to benefit from all of that?
So the way I think about the world is, or the way I like to break down anyways what we do here and on the venture side, is that there are really a few main pillars of what has shown to work in crypto. And it's because, if you really, go to, 1,000-foot view or 10,000-foot view, what are the things that blockchains are really good at? They're really good at coordinating trusts against across otherwise counterparties who would not trust each other, right? They're really good around being, transparent and, being able to settle atomically and programmatically. And they're really good because of those things at moving value in information, right? And when I think about blockchains in that sense, and I take kind of a first principles view, and I said, well, what are they best suited for? They're best suited for the movement of money. They are best suited for the movement of value, right? And so what we have always been focused on is the things that, probably benefit most from that thesis, right? And that's decentralized finance, it's market infrastructure, it's the movement of money and stablecoins, right? It's the, maybe call it, all of the infrastructure that goes into allowing those things to happen at a large scale relative, if it's, call it a consumer use case, or if it's a institutional use case. And then, maybe the access points, right? So, also things that are maybe, DeFi, CeFi kind of crossovers, or, some of the CeFi businesses as well. But what we haven't really been focused on is we haven't really been focused on anything to do with, call it consumer. And consumer in so much as we think about, social, right? And one of the things I think is interesting, and we talk a little bit about this, is the Farcaster pivot that we saw a couple of days ago. But where we've really understood that this technology changes things is financial infrastructure. And so when it comes to the read, write, own type of ethos, that has not been where the core of what we think about, and the core of which the way we invest. And I come from a fintech background, so that always also makes a lot of sense from my vantage point, because that's the way I invested and banked before. And so when I think about, okay, well, what does that mean for the future? What does that mean for, call it 2026? It means that a lot of the things that we've seen work today, which is stablecoins and DeFi and CeFi and market structure, those things are now all, at I think really what I would call an elbow, or at a, call it, nest curve, where they're either taking off already. So, very interestingly, we started to see with Hyperliquid derivatives on chain in a DeFi manner, or, hybrid DeFi manner, or that way you think about Hyperliquid, taking market share from, Binance and others. We've started to see, also from a spot perspective, that happen as well, right? We've started to see a really big push for, doing, call it non-custodial type of neobanks, whether that's on the business side or it's on the consumer side. I mean, Stripe, obviously, talking about this. I think Klarna announced a day or two ago that they are doing a non-custodial wallet with Privy, right? And so we continue to focus on that, and then we continue to focus on the net new novel applications that get built on top of those rails or are enabled by those rails. And so that's inclusive of new novel financial products. It's inclusive of, applications like Polymarket, which we're large investors of. Those types of things are, continue to be the focus for us next year. I think we're only going to see an acceleration in that. So we've pivoted a little bit, only in so much as we continue to back the same things, but we're doubling down on those now in later stages and doing, larger checks, more ownership, et cetera. So we still do a little bit of everything, but that's really the focus for next year.
Do you think this means we're shifting more towards fundamentals, or the space that we are in, the themes around investing in this space are shifting back to fundamentals, away from some of the more hyper speculative narratives that I think we saw in 2023, 2024?
Yeah, I don't think this is a crypto specific point, right? And so there's a lot of conversation that we have sort of in a vacuum, or I feel like people act as if it's very crypto specific, and it's not. What typically happens at the early days of a new technology and new innovation is that they sort of outrun, what, the current use cases are, right? So this happened during the tech bubble as well, right? Of course, everybody put .com into their name, and, they got, crazy valuations, and they ran up into, 2020, 2021, 2000, 2001, and then we had the crash. But then you had essentially AWS come and allow for distributed cloud computing, allow for people to grow new applications cheaper and in a more scalable way. And that resulted in this application explosion in software that happened from, call it the global financial crisis, late 2000s, until now. And in my mind, that's the exact part of what's happening in crypto today, right? Which is that we are now seeing this, call it maturation of the infrastructure that's going to really kind of, accelerate, those use cases going forward. And so that is what I'm really excited about. So when you ask, okay, well, is it a return to fundamentals? What it is people are starting to figure out exactly what the addressable market is. And, a lot of the dreaming we were doing before is now coming to fruition. And as that's coming to fruition, it allows us to more appropriately, as investors, size the opportunity, right? I think we're seeing the same thing happening in AI right now. We're seeing the same thing happening in any sort of emerging technology. And so I do believe that users and TVL and volume and metrics are going to continue to matter more. But I also believe that that's just natural to the evolution of what's happening in innovation here.
It's funny too, because I see just in, Web2 land investing, a lot of the memes, just like people throwing the Intelligent Investor book into the trash and like fundamentals don't matter anymore. And this is all just like a money-driven Ponzi right now. And then crypto's taking this hard pivot back to fundamentals. But for all the reasons I think you outlined at the end there, is like, okay, we're starting to see what addressable markets look like. Like you kind of can't hide from some of that stuff anymore. It's like been this like eloquent growth story for a long time. And I think that's some of the stuff that Santiago was getting at with his, just brutal breakdown of, hey, this is all just cash flows, essentially. And here's what the math tells us. I want to step back again, though, and I want to talk about something else that our industry loves to talk about, which is this 4-year cycle. Again, I actually think it was that same Empire Pod. I heard you state that you're not a 4-year cycler subscriber, and you're a fellow brother like myself. So would just love for you to kind of maybe explain a little bit of what the 4-year cycle is and just your stance on it. Give us some more color just around, why you don't attach everything to a cycle that's happened 3 times.
Yeah, it happening 3 times, I think, is obviously part of that, right? No, and to your point around, Santi, I will say him and I definitely disagree about it just being all cash flows. I think, when it comes to thinking about how to value technology and networks, I definitely take a more, growth year view than he does. But I do think, very clearly we're getting back to these, call it core metrics and core users. But to your point around the 4-year cycle, listen, the 4-year cycle exists because, if to maybe back up a little bit, it exists in the minds of everybody in crypto because there has been so much of the flow, so much of the demand that has been driven by the price of Bitcoin itself, right? It has almost seemed like we've seen this kind of, just predetermined, investing sort of mechanism or kind of flywheel where people, they buy Bitcoin goes up in price, then they rotate to some sort of altcoin or Ethereum, and then they rotate to the further down the risk curve. And these things kind of like cascade and they follow each other. And that's been, the way that everyone thought about making money in 21 and 22 and like earlier cycles. And that's really tracked this, Bitcoin halving cycle, right? And because Bitcoin was always the leading indicator, and because Bitcoin was always, the albatross in the room, and not to say it's not today, but that was how people thought about the ways of which people would make money, and, capital would flow, and then they would sell down and they would realize that value, and so on and so forth. And so it always followed Bitcoin, right? That was very idiosyncratic to crypto itself. If you buy into what I said earlier, which is that we're now in the, call it, institutional adoption phase, well, I can promise you nobody at Klarna or nobody at JP Morgan cares about the Bitcoin halving cycle when they think about running their businesses on blockchain rails. And nobody at BlackRock cares about the halving cycle when they think about increasing the demand for their tokenized assets, right? What they care about is, how do I build a net new business on crypto rails that is cycle independent and that will, serve a broad set of people and serve them better and serve them with less intermediaries and maybe be lower costs and maybe be more or easier to distribute on a fractionalized basis. And how do I just make my business and serve my customers better, right? And so my perspective has been that if those are more of the flows going forward, and right, the Bitcoin ETF sold something like 4% of Bitcoin today, and a little less than that, so we'll probably continue to see this grow. And if those are the people that are now controlling or are now the marginal buyer, then the flows of crypto and of Bitcoin are now going to follow the whims of those people. And the whims of those people are going to follow the business cycle, not the halving cycle. And so, as the macroeconomic, opportunity set expands, as people get have more capital, as there's more liquidity, like that is when we will see more money flow into our space and not have anything to do with the halving cycle.
I will say it is uncanny if the top, let's say, was in October. I mean, looking back at where we topped, going from like a market low to market high in 2017, and then the next high in 2021, and this next high, I can't remember the exact number of days, but a part of me is with you. I think that it's somewhat silly given how much the industry has matured and just the infinite number of like factors to consider. Crypto is a big enough asset class at this point that, we are trading some days like a tech stock, but then we also have attributes of a digital gold, or especially if you look at something like Bitcoin and Ether, and then I feel like everything's following those two, or, at times we had Sol leading the market in the past few years. Where do you think, or what do you think 2026 looks like, broadly speaking, for crypto prices? The Mantle Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on Mantle's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow Mantle_official on X.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. DECIBEL is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
I'll preface this with not financial advice, and so don't sue me if you do what I say and lose money. But I am broadly just like very bullish on the direction of the space, right? And so I'm hesitant to give like price predictions because I don't think anybody really knows, right? But if you told me that the price of Bitcoin or ETH was lower a year from now, I'd tell you were lying, right? Like I'd take the other side of that Polymarket. So I personally expect that we'll continue to see broad adoption of blockchain rails. I personally think that we'll continue to see a lot of interest. We don't have necessarily call it the same amount of tailwinds that people thought we had coming into this year in terms of just these new catalysts with potential legislation and with there being call it a more pro-crypto administration, a more pro-crypto regulatory body. But I think that those things have shown us and have now given us a foundation that what we're starting to see is the people who said, actually, I want to tokenize more assets are now actually doing it, right? Robinhood announced their L2 back in July, but it doesn't exist yet. It'll exist next year, right? I think earlier this week, testnet launched for Tempo and Stripe, but again, it doesn't exist yet, right? BlackRock continues to talk about tokenizing assets, and they're continuing to move forward on that, right? We saw Superstate talk about, doing more around, call it, direct issuance of equity on chain. Like, they're just now doing their first things, right? And so if you look at the setup for me for that institutional adoption, it strikes me that it is now, better than it's ever been, right? And it's not, a lot of people say, well, hey, listen, in 2021, we had a similar amount of headlines, or people were looking at it then as well. But it really wasn't the same way. I was at a big financial institution, and the infrastructure just didn't really exist. I remember, paying $300 to get a transaction through on ETH, right? And they not being able to land anything when there was a new 10,000 NFT drop, right? And today, the block space exists, the wallet infrastructure exists, the compliance infrastructure exists, the regulatory clarity exists. And so I think, by the way, I see all of the new founders that are coming to this space. I think it's going to be a really exciting year. And I just can't imagine we do anything but continue to trend up in the right direction. What does that mean for volatility? Every week, every day, every month? I don't know, right? But if you're, a long-term believer in this space, I don't see any reason to be on the sideline at the moment.
Dude, I'm just glad we found a bull. I knew there was one out there. I mean, honestly, a lot of the views that you share are just so similar to how I feel about things shaping up for 2026 and beyond. Not just 2026, but a lot of things that you set up. That point about Tempo's just in testnet, Robinhood Chain's not live. I think also too, a lot of people like to clown on like Raoul Pal a bit. He's done the Banana Zone thing. He was maybe hopefully early to Banana Zone. I don't know when Banana Zone actually happens, but he makes a lot of good points about relating it to the ISM and like the business cycle. And we actually haven't really taken off yet. And I think there's just so much, build up heading into 2026. You can talk about, the new Fed chair, Trump getting his guy, obviously, with Hassett.
It's been a tough year economically, right? No matter what you think politically, it's been a tough year from a macroeconomic perspective. And yet, the NASDAQ hit all-time highs again. And so you have to believe that if there's exposure on a macro perspective, and that's, in some way correlated to how this trades, that 2026 is going to be better. And by the way, I think every analyst on the street thinks that's true as well.
Yeah, totally. And as much as I liked the path that Doge was trying to do, I mean, that was utterly bearish as well. Just I think that whole event. But anyways, I want to kind of keep on this trend a little bit about predictions. You just recently posted a review of your 2025 predictions, and there was, I think, 15 of them. And I think you were kind of partially right on about 10 out of 15, something like that. But one of them I just wanted to highlight just as an example, I thought was eerily prescient. I'll just read the prediction. Following the success of Athena, we have a lot of new decentralized stablecoin projects pitching themselves similarly. But to compete, they're going to have to start to go far out on the risk curve, mostly focused on Ponzonomics to attract deposits, causing one very large DeFi deleveraging event that causes a crisis mid to late 2025. Anyways, thought this was a really good one because we had multiples. And then, in this kind of mid-late to 2025 period, we have Stream Finance, which, was just a complete disaster for DeFi. So anyways, yeah, just kind of wanted to sum up, give you a chance, just kind of review that. And if you have anything more to add.
Yeah, I mean, I think on that piece, I think probably 5 days after I wrote that, you had maybe quicker than that. You had the usual issue, if you remember, where they came out and they changed their essentially the economics of what would happen if you wanted to redeem usual, and it created a bunch of people who basically a bunch of people had looped it that were underwater and created a cascading event there. I mean, usual is now essentially worthless, right? Following that, you had the Stream Finance thing, as you talked about. I think we had the Elixir DEUSD DPEG, somewhat similar. And what we've seen a lot of is that and in fact, probably one of the defining, things that has happened in the last year, or things that people put money behind in the last year, is structured products and different types of investment vehicles that people have called stablecoins, right? As you've basically just said, okay, well, like underneath this thing is some sort of structured product, and if you stake this, token that will peg to $1, you'll get some sort of yield on top of it. And so, we call those stablecoins because we peg them to $1, and that makes some sense. But because of the fact that Athena had so much success with that type of stablecoin, there was just 1,000 copycats. Now there were 1,000 people doing the basis trade in the same way they do, and then Athena launched their actual call it treasury-backed stablecoin as well. But then you had people doing things like what we just talked about, where usual is a wrapper with like kind of different type of like bond mechanics. You have cap money, which is doing sort of like a CDS or a credit default swap with loans. You kind of go. Like, I've been pitched things like mortgages back in stablecoins, and like all sorts of both like on-chain and off-chain assets. And you start to figure out that like people forget what duration mismatch means, and people also I think like to make a lot of the same mistakes that we made in traditional finance, but in a new, technically innovative, interesting way, programmatically. And so I wasn't surprised at all that we had these things blow up, and I think we're not done, right? Like there's just going to be a lot more of it. I think to your broader point around, that review of that 2025 predictions that I made is I was probably the things I was most bullish on happening, I actually think did kind of happen. I just didn't reach like the numbers that I thought they would, right? And so I think in many ways, as I think about next year, I'm probably just going to double down on a lot of those things, because I still think a lot of those are only going to accelerate.
Do you think that the designs behind these protocols, some of the ones you mentioned, do you think they're at fault, or is there like a greater issue at hand with verifiable reporting or like some sort of like auditing service? I'm going to be very biased here because we just did an interview with these folks, but Accountable, they have a data verification network. We were really excited because we feel like everything that's been happening in the markets, starting with the 1010 crash and then the blow up of Stream and some of the other folks, it proved to us that one of the bigger issues is that we were, relying on these protocols where they have a yield, and the yield is essentially being self-reported on websites. In rare cases, there would be some extensive reporting through like a Dune dashboard, but even that can be flawed because those dashboards can report what's on chain, and then there's some self-reporting that goes on in certain instances. And so anyways, we've been, I think, excited that some of the zero knowledge tech is finally going to play a role. We think it can, actually verify who has what, backing what yields and what stable coins. So anyways, I asked you a question and then I suggested the solution there. So I'm curious, like, do you have any thoughts on this? Is this maybe opportunity for improvement in our space in 2026?
I mean, absolutely, no doubt about it. The stream finance point to the conversation earlier is actually interesting, because if I think about the deleveraging events that we've had, or stream finance was actually sort of a different problem than the problem that happened in like Usual or Elixir. And a big part of the reason for that was because we've had this proliferation of these on-chain vault products, right? And so you have something like, an Athena, which is very straightforward, right? Which is, okay, well, like you go and you put in some collateral, you get USD back, you can stake USD. If you stake USD, you get the yield on the basis trade, right? But they're doing it themselves, it's very clear. But then you've had this proliferation of like, okay, well, what if I were to take some sort of stable coin or take some other asset, and what if I were to put it into a vault? And then some sort of what is essentially usually like a fund manager or a trader, takes that capital and then goes and does something with it. You often, sometimes they tell you, but sometimes they only tell you so much. And they guarantee you, or they suggest that there's likely to be some return, but you have no idea like who controls the multi-sig. How are they allowed to take the capital? Where are they allowed to do with it? Like, what sort of recourse do I have if they don't bring it back to me. Like, how do I get the yield generation? And there's been a lot of what I would say is just like complete recklessness, honestly, around how these things have been built. And so they're built a little bit differently if you use like a Midas vault versus an upshift vault versus I think there's like Veda and a few others. But some of them have said, okay, well, like, hey, maybe you can have full control over the multi-sig. So you can just take all the capital and run with it if you really want to. But we at least have to have transparency into the wallets and the APIs and have the API keys of like where you're doing the trading or where you're doing the structured product so that we can, track, what those positions look like. That Upshift has that product. There's at least some like verifiability that the things that people are saying they are doing actually do happen. So you can see the wallets. There's, for some of the Midas vaults, what we've seen none of that, which is like, it's a completely just like, okay, I put it in and RE7 goes and does whatever they want with it. And like, they tell me what they're doing, but I can't actually verify that they're doing that, right? And so that's what we had in the stream finance situation, is that like, it was actually very unclear what the stablecoin was being used for in terms of collateral or looping or, anything else elsewhere, because there were some statements that it might be used, but there was not a single way to verify what was happening there. And those products clearly need to get better. If I think about this in a corollary to traditional finance, I can't imagine going and giving my money to somebody where there's like literally no recourse whatsoever, if they just like take the money and run. And, this does happen, of course, in traditional finance, but we're supposed to be solving. We're supposed to be better than that. Like, that is part of the benefits of blockchain. And so I think that needs to get cleaned up. The accountable guys, I've met them, to your point. I know they have an interesting solution there. And then I think we just need to be better about managing risk, and then how we think about like Oracle construction and leverage, right? And because some of these things, like, if you go and you tell me, hey, listen, I'm going to like issue a stable coin that's like backed by a mortgage, right? Like, there's very clear duration mismatch there. And like, how do I think about like liquidation events, and, how do I think about mass redemptions? It's really, really tough. And these are not easy problems. And too many people, I think, approach them a bit haphazardly, honestly.
Another trend that we can maybe look forward to in 2026 is if we do see more zero-knowledge integrations that allow for, let's say, privacy, that allow for, I think, fund managers to have some bit of a moat with the strategies that they run. Like, I think everything that we've talked about here, it properly critiques all that went wrong. And I think some of the like flat-out fraud that has happened in the space. At the same time, that's mainly because like we're used to seeing DeFi protocols that are extremely painfully transparent. They're simple. It's like we have a money market and, we pull all of our collateral together, and then we borrow from that pool and everyone has the same interest rate. It's awesome. And, we're grateful for that part of DeFi scaling. But I do want to see parts of traditional finance be able to be reimagined on chain. And I feel like zero knowledge is a big part of that. I don't know. Is that a theme at all you're looking forward to in 2026, or are we still too early with zero knowledge?
I mean, I think we've been pretty bullish on ZK for a while, where, I think the largest backers of ZK Sync, which unfortunately hasn't performed to what we had hoped so far, but continuing to really work on those use cases. There are some interesting people trying to use, ZK as a way to bridge the off-chain and on-chain worlds. There's like a protocol that's really early stages right now called 3Chain, which is trying to do, call it like under-collateralized or uncollateralized lending, where you can use ZK to actually verify my off-chain credit score, right? And then that off-chain credit score can go and help, underwrite and reflect like what, how I can take leverage on-chain. And then there's some work around, if I do default, is there actually still some legal recourse? It's really early days on those things, but I think fundamentally privacy is something that we'll need more of, and we'll also need more of this, ways to bridge trust between the off-chain and on-chain world if we're going to bring a, the amount of, financial services and financial products that, I think will come on chain, and I think you do too. So it's early, but it continues to be a focus for us, and something that we're interested in helping people try to solve if they can.
What a great example too of hopefully a theme that grows in the space in 2026. We had 3Jane on several months ago, and I've been one of the early users. I can attest that 3Jane score, it's so cool. I mean, as like a early DeFi adopter, it feels so good to be submitting all sorts of information that does help to tell a story of my credit score, plus what's on chain. And again, if all of this is working with this ZK TLS, hopefully my privacy has truly been preserved there. I guess I don't know for certain, but at the end of the day, it spits out a score. And I think I was able to borrow. I had no collateral in the system, and I was able to borrow at somewhere between 7 to 10%. I was making interest payments month to month. The system works. It just, the timing of it, unfortunately, it launched, and I know they've got lots of early users there, but I think all of us sort of pulled back in terms of where we are deploying funds given what's happened since the flash crash in October. Let's get back to your predictions. Just any other predictions for 2025 that really stuck out for you? Anything that surprised you, or maybe like wins to celebrate?
So I think the thing that actually surprised me the most is what I was wrong about.
As a DeFi investor, I turned to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's SYRUPUSDC and SYRUPUSDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance. Hey folks, I want to tell you about our sponsor GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions. With battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs, Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
So I think the thing that actually surprised me the most is what I was wrong about, which is that I think I was wrong about the scale of stablecoin adoption, right? And that might sound, I think, surprising considering anybody who's followed me at all knows how bullish I am on stablecoins and how much of my time is spent investing in stablecoin startups and RWA type startups. That's probably been my number one focus for the last few years. I think the thing I'm most known for. And when you look at the headlines, you see, okay, the Genius Act. You see there's rulemaking. You see, people like Klarna talking about issuing their own stablecoin. You see all of the work that Stripe has done. And there's like so much excitement in the boardrooms. There's so much excitement at, the quarterly earnings calls. But then when you go and look at the data doesn't really reflect the excitement. All right. And so I've been a little bit surprised on the fact that, we've only grown about 50% on issuance this year. Instead, I thought we would grow 2 to 3x on the, call it the what I would call the adjusted transaction volumes. We haven't grown that much at all. A little bit. There's been sort of a stagnation of what we can verify the payment on the payments data side. So Artemis did a report that we did with them, and Castle Island did with them around, call it, looking at what we could verify were payments volume specifically on chain. And there was a couple really bullish things out of there, which is that we think as much as 10% of, remittance in the U.S. to Mexico corridor and the U.S. to India corridor are happening on stablecoins. But that hasn't really grown this year. And we haven't really seen peer-to-peer grow this year. We've seen B2B grow this year, but maybe not at the, rate we would have expected. I think the volume on chain from like a daily average volume thing is also probably a little bit misrepresented because there's a lot of netting happening, I believe, at the service providers. So, I send whatever, $100 million, but then I receive $80 million. And then the actual settlement that hits a blockchain is, being netted to, call it 20 million versus the, 180 million of actual volume. So I think there's some of that going on. But I was just surprised to see, not be able to see in the data how excited I was about stablecoins and really reflecting the stories that, I was hearing from people. So I think for 26, I'm really just doubling down on like, this is the topic that is going to keep growing. And we will finally see it in the data at some point. And so that still remains my most exciting, part of crypto right now. Now, that's inclusive of continuing to serve the global south, of, B2B, corporate payments, of treasury management. But it's also inclusive of now going, down to other types of tokenized assets, whether that's, call it money market funds, and then going from money market funds to things like, CLOs that we've seen. I think Janus Henderson has $1 billion of CLOs on chain. We've started to see some interesting stuff happen around, tokenized collateral for equities. So I think Caroline Pham from CFTC was talking about using Bitcoin and other tokenized products as collateral for trading. And, now we've seen like, Trade XYZ, which is the unit team on Hyperliquid, launching, equity perps. And I think something like 10 to 15%. Given the day of volume on Hyperliquid is happening in equities now, right? And so equity perps. And so, those types of, call it like hybrid assets that are utilizing, tokenized assets for real world use cases, that still continues to be my most exciting thing for 2026, but it was also my most exciting thing for 2025. And I was just a little bit surprised how the data bore out during that year.
We did a whole episode with Electric Capital on a report they did that basically tied the growth of stablecoins back to ETH value accrual. Have to ask you, is that a way that you are considering betting on stablecoin growth? Because anytime my friends, outside of our space are asking about stablecoins, the most immediate follow-up is, how do I bet on this? And, Circle now being publicly traded has been, one new way that I think they've seen for investing, but really it still feels like we're somewhat limited. So anyways, other than longing ETH, I guess, what else do you see possible?
I mean, probably the easiest way is to be long Circle and long Coinbase. Coinbase obviously, and also a big part of their strategy going into next year is payments, right? They've been very bullish on it. And from an on-chain perspective, listen, being long ETH, I think is exciting, and I am long ETH, and I continue to think ETH will do well. But if you believe in, call it atomically settled, like real-time payments happening, like they're not going to happen on ETH mainnet, right? And that's just, the reality is that ETH mainnet doesn't scale to be able to serve that market. If you believe in just call it like netting that's happening, and you just call it batch transactions, that is happening on ETH. And actually, if you look at the data that Artemis put together, it actually shows that the vast majority of stablecoin payments today are happening on ETH and Tron, right? And so, Tron being, the place where a lot of the global south sends USDT and people who truly do not care about what blockchain they're on. And then, a lot of this netting is done on ETH because that's where a lot of stablecoins exist today. But if I start to think through, okay, well, what are the use cases that we think can start to be, brought on chain, and can we call it like real-time settlement, and can we do, something that's more atomically transacted? Like, it has to exist on something that's not ETH mainnet, right? And so I continue to believe that, there are other types of projects that are going to be exposed to this. Some of that is the money market funds. Some of that is a lot of what we do is, venture investing and, things that unfortunately like a broad set of people don't have access to. But I'm sure we'll also, at some point get a tempo token and a base token and a monad token, which monad, this is a core focus for them. Solana's obviously thinking about this. And so I think there's literally just being long blockchains and long crypto is probably a way to just express that view.
I feel like we've asked you like 10 different ways what you're bullish on for next year, but I'm gonna ask you again in like a slightly different way. So What are you bullish on in crypto next year? But the caveat here is bonus points for being contrarian. So a less popular view or something that you think is less popular.
Yeah, maybe less popular. And obviously being contrarian is one of the ways that you make money, right? And so we always talk about it like, when you're a venture capitalist, like you either need to be early or you need to be contrarian or you need to be just like smarter on a certain topic than somebody. It's like really those are the only ways to make money. I think, one of the ways or one of the areas that have been pretty bad for investors that I think is probably more in vogue right now is security, right? And so security specifically, there's been a lot of startups that have tried to solve it, but, there hasn't been actually a lot of people willing to pay high prices for security software and different types of security protocols. I think insurance is the same thing. These just haven't really, panned out. But if all of the things that I think are going to happen on chain, all the things that we've talked about happening on chain, if they're going to scale, you need security, it needs to be institutional grade, and you need insurance, right? And so I think those two markets are ones where we haven't seen maybe the uptake we thought we would, but I expect are going to grow a lot next year. Beyond that, I wouldn't say this is contrarian, but I do believe that, there will continue to be more capital put into, call it the application layer. I will continuing to think, and what does that mean? I think some of that means that I actually think social will come back a little bit in a way that it hasn't in a while. And on a week where Farcaster said, hey, listen, like we're actually pivoting from being a social first company to being a wallet and a trading application, I actually think that's quite interesting because we're in this world where finance is a part of social, right? So in many ways, like, we've invested in Polymarket, many rounds. And one of the topics, when my LPs ask me like, oh, what do you have that's like maybe more social in the portfolio? I said, well, it's Polymarket, right? Because, when Sam Altman was fired on a Friday and rehired on a Monday, and every text chain that I was in with my friends was about, oh, does he come back or not? The conversation was often additive or was inclusive of, hey, like, what does the Polymarket say? What does the data say? Like, well, should we put some money on this, right? And I actually think using that mousetrap to be social is going to be a big focus area for next year. I think we'll see more social applications become popular around that.
I've actually noticed in Polymarket, maybe this is for Polymarket power users, they'll laugh at me, but I just thought it was so clever that there's a chat under each one of the markets. And when you look at the comments that are being made, it actually shows the profile of what they're betting on that market. So you can see someone who is bullish on a 50 bip rate cut for the FOMC, and you can literally see that they are long that position. So that to me was just an interesting intersection of what I would refer to as, prediction markets meet some sort of Web3 social.
Rob, I saw you on a appearance on Bloomberg just the other day, and I think it was like a 3 to 4 minute segment. You talked a lot about Polymarket, but before we started rolling today, you said there was a lot more you wanted to kind of get out there. So anything you can expand, just your overall kind of views on Polymarket, where you think this trend is going over the long term with this kind of new format?
The thing I really love about Polymarket, and this has been true since, we invested a number of years ago and as we've continued to back chain, is that at the end of the day, what are event contracts or what are prediction markets? They are actually just options, right? They're just binary options and they're on any specific outcome. But they serve a lot of different purposes as a financial instrument, right? They serve purposes that are extremely social, as we've talked about, for, bringing people together, for being able to talk through, different types of, whether it's sports or whether it's pop culture or whether it's, the Popple election, right? It provides information on that, this collective wisdom on these specific outcomes. It provides a fun way to engage with each other, but it also provides, on top of that, ways for, institutional investors to understand, the wisdom of the crowds. It provides a way for, I think I gave an example in that Bloomberg clip that you talked about how I was talking to a insurance company that wanted to hedge out some weather-related risk on a event contract or on Polymarket. And so as I start to think through, what does, Polymarket do? It is an information aggregator that has proven time and again to be more accurate than like polling. But it's also proven to be a good social conversation starter. It's also proven to be a good financial product for institutional investors. It's also proven to be a hedging mechanism and direct exposure to certain types of outcomes for, call it, corporates or any other people who are exposed to different types of, different types of activities, different types of things that are happening. And so it becomes, in my mind, one of the easiest ways to have a direct exposure to the exact thing that you want to have exposure to, right? And so it strikes me that this is a market that can be incredibly large because it's not confined to a specific vertical. It's not confined to a specific type of use case. And so we're extraordinarily bullish on them. Obviously, they've gone from, a 9-figure valuation a few years ago to a $9 billion valuation just a couple months ago. There's been rumors of a lot more interest there. Obviously, Kalshi also is the biggest competitor, just raised an $11 billion valuation. And, I was talking to Jeff Sprecher, the founder of ICE, who they kind of too much fanfare invested, $2 billion into Polymarket recently. And when I asked him about, what he believed the outcome for Polymarket was, he said, it's going to be a $100 billion company. I've got no doubt about it, right? And so I continue to be as excited as ever about where they're going and with the U.S. launch.
Guys, I think this is a great place for us to start to wrap up. So first, I want to remind our audience they can learn more about Dragonfly by going to dragonfly.xyz. They should follow Dragonfly_XYZ on X or Twitter. Follow Rob's personal handle at Hadick M. And then Rob, thanks so much for joining us. Just want to give you the final word before we go.
Listen, the only thing I'll say is this was a pretty positive podcast, and I think you can tell by, the way I like to talk about the things that are in my portfolio and what's happening, that I'm excited about what's happening. I'm excited about where we're going. I know there's a lot of these, call it more bearish, posts that are being put out there on X, and I encourage all of those people to reflect on, what's happened here, and more broadly than call it just talking about the casino, because I think that this is a brand new financial infrastructure that's reinventing the way that you and I see and interact with finance, and it's giving better access, less intermediaries, better pricing, and it's helping a global economy come together. So I'm super excited about what we're doing going forward.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.